Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Ash Kaluarachchi of StartEd Accelerator and the New York EdTech Week. Ash, thank you for joining us.
My pleasure, Hall.
Can you tell us a little bit about your background before you got invested in early stage companies? What did you do before this?
Certainly. Well, I think my entry into EdTech and early stage was not obvious, but in retrospect, it makes sense. So let me tell you a little bit. Let me start the story in the middle. I'll work my way back and then bring you to the present day. Prior to my time with the EdTech industry, I was focusing on helping executives learn from each other. So it was kind of a walled HBR that was introducing peer groups and best practices research into the corporate learning environment. And this company was called the Executive Board in DC, and I helped them build out a practice for tech managers that were in the middle market. The company has since sold to Gartner and has done well. And while I was at the company, it wasn't necessarily executive education, but it was that. I see that now. Prior to that, I had a couple of companies that were not in education, in food mobility and in job recruitment internationally. Both of them failed miserably, but they were a lot of fun, and we learned a lot. And prior to that, my parents ran a school for 300 kids out of our house, focused on elocution in Sri Lanka. And I guess it's there that I got my initial taste for education.
Well, that's great. So for those who are investing in the EdTech space, what's your advice for those investors who are just now coming into it? What would you advise them on?
I would say don't do it. Well, I say that somewhat selfishly because since I see that as an area that has great opportunity, I'm a little protective of the founders in the space. So if you are interested in solving problems from learning through K-12, through higher ed and corporate learning, I see those 4 or 5 market verticals collectively as EdTech. I think others see it a little bit differently, but if you take a look at those 5 verticals in general, it's about a $6 trillion global market and growing. The interesting thing about those verticals is that they intersect a lot of other industries. So it's almost a process in every other industry. So it influences a lot more than that $6 trillion. The focus that I would say is very required. Investors must be aware that there are non-financial gains to investing in the space that they must also value. So when it comes to EdTech, I would hesitate to call it a social impact space specifically because that has certain connotations. But when you're investing in EdTech, you have to also care about and be making sure to measure the outcomes that are around learning, the outcomes that are around job creation and societal and personal growth. And if you don't care about those aspects of value, the opportunity isn't as large as it could be. In terms of challenges, there are plenty of them. But I think those 2 points around caring about the types of value created and looking at the market as a whole are probably good places to start.
So how's that industry evolving? It seems like there's a lot of change going on today with the introduction of technology and more people coming into the space. And how would you characterize the industry's shaping and trends?
I don't tend to like investing in trends simply because they don't tend to signal the biggest forms of value created in a space. However, I do realize that specific sets of opportunities do manifest themselves as trends in the early stage, especially in the early stage environment. I'll state that I think the fundamentals of investing still remain the same in that you have to make sure that you have the right team, a large market, evidence that a large problem is being solved, and finally it has to be a repeatable, scalable product. Those fundamentals are still very true even in the education space. But in 2019, what you're tending to see are a very large focus on the transition points within certain stages of education. So, for example, I mentioned those 5 different verticals of early childhood, K-12, higher ed, corporate learning, and adult learning. the transition between those industries as an individual tends to be an interesting space that's growing. So, for example, the space between graduating from college to entering to the workforce, that connective tissue is something that I've seen a lot of investors gain a lot from. There have been examples of large and growing companies tackling problems in that space. For example, one of the largest acquisitions in the space just announced a couple of weeks ago was 2U's acquisition of Trilogy for $750 million. They provide boot camps around coding and data science to universities. So making that tie between the academic environment and the workforce has been an area of growing interest.
So what is your take on coding colleges? You see a lot of those popping up where they're teaching the latest technology for coding and computer science. And I found that some universities have 5-year development cycles for bringing in new content. And in today's age of coding, which new languages come up every 18 months, that doesn't quite fit into the university format very well. What's your take on the private versions of those things? Where do you think those are going?
Well, it depends on what the business model is. At the end of the day, I think boot camps were kind of what people were thinking would be this catch-all silver bullet a few years ago. I think a fair portion of those boot camps have actually failed or kind of meandered in their growth. Some have grown and are robust companies. But I think the way that the industry is looking at coding is probably inaccurate. I think coding shouldn't necessarily be a boot camp or a school in itself. That would almost be like having a separate, solving this new language that is emerging by creating a separate school for it, right? So I think instead, like language learning, it should be integrated with other forms of learning and done so very early. So in my opinion, coding should be something that's introduced, or the thinking there behind coding should be introduced as early as in kindergarten. And there are great solutions that are tackling that aspect. On the flip side, I think even coding among the elderly has been an interesting area that some companies are focusing on, because that's a great way to engage a very large and still very large set of workers in the workforce, but has been overlooked for the majority of the renaissance of the space.
Well, you spoke before about how impact is a part of your investment thesis, or should be anyone's investment thesis for the ed tech sector. But can you expand more on what you look for in startups to invest in this area? What makes for a good fit for your fund?
So just to be specific about what StartEd does, and perhaps I'll tell you a little bit about my story from the time I entered the industry, just to put that in context. So I entered into early stage acceleration around the same time that the first edtech accelerators were emerging. And even accelerators were young at that time, but figuring themselves out. I think there are still two major players in the space, which are probably Y Combinator and Techstars. But there has been a plethora of accelerators launched since. I think they number in the 2000s now globally. I was helping launch one of the early edtech programs here in New York, which was actually an experience in knowing how not to run an accelerator. And what I learned from that experience is that accelerators tend to function well based on two criteria. One, the credibility that the team and managing directors have in the local environment. And then secondly, the ability to efficiently and effectively run a learning program. And that aspect of running an efficient learning program, because that's what accelerators are, a next generation model for schools, that tends to be the foundational factor around the programs that we now run at StartEd. To explain what StartEd is, briefly, it is a company that we founded about 4 years ago to do two things: attract and develop an army of education innovators to solve the world's largest challenges, and then also turn New York into a hub for education innovation. And we do so by creating accelerators, incubators, courses, and festivals. Our thesis for the company is that we needed to create a whole ecosystem for companies to learn about the space, test it out, be accelerated, and then get their brand out. And each of the elements that I mentioned do so in the life cycle of a company from idea to exit. The companies that we select to invest in or support, we've invested in about 30 companies so far, but we support about 500 companies each year, tend to have those fundamentals that I mentioned earlier, the people, the large problem, the progress around solving problem, and then finally a compelling product. The additional layer of an edtech company tends to look like whether it's a learning solution or not, whether the product actually is creating learning outcomes. How are they measuring efficacy, right? Questions like that need to be asked early on so that when the company is actually approaching Series A, they actually have data around it. At the seed stage, they rarely do. Secondly, if a company is solving problems in K-12 and higher ed, navigating and understanding the regulatory environment around education, avoiding challenges, but more so about striking opportunities. It's very often that several $billion will be put aside to tackle a particular problem in education. And if you're not aware of that bill being passed or regulation being enforced, you'd miss out on a gigantic market, which has happened often in the space and happens regularly. And I think thirdly, very much like healthcare, the risk of data, especially when you're dealing with students, is something that you need to be mindful of. There's plenty of organizations, including companies like YouTube and Google, that have suffered for not being cognizant of users' data when it comes to COPA or FERPA regulations that the government sets. And those are very distinct regulations between the US and globally. So if you're trying to build a global company, that becomes even more complex.
Well, are there any example portfolio companies or startups that did well with the StartEd Accelerator?
Certainly. There are companies that have been successful from the programs that I've run, and there are those number in the 60s of companies, the dozens of companies. And I mentioned the 30 or so companies that we've supported at StartEd. In that first category, when I was running the program at Techstars, I was a program manager there back in 2014. We supported a couple of companies that included Degreed. Degreed, run by the CEO, David Blake, is a company that focuses on the corporate learning space. What it essentially does, it provides a lifelong learning platform for individuals and those within organizations to discover learning content, build skills, and then also, most importantly, be certified that they actually know something. That's a company that's valued in the $100+ million and has grown to that over the last 4 to 5 years. There are companies that I've seen from latter classes that are doing very interesting things as well. There's a company called Classcraft that I'm a big fan of. The founders, they're Canadian. And what they're doing is creating a new category of solution, which is an engagement management solution. And engagement tends to be a big problem within the K-12 classroom, engagement between the student and the educator, to be specific. And the way they do that is they allow educator to create a fantasy layer over the content that they're teaching. So a student is no longer simply learning Egyptian history. They're learning Egyptian history as a knight or a mage or a sorcerer, and they're able to be incentivized or desensitized to conduct particular behaviors related to engagement in the classroom. That company is growing robustly, and it's one that you'll probably hear about in the public arena soon.
Well, that's great. I appreciate you giving a rundown on those startups. What are the challenges in this space? You've already talked about some of the things coming up with data and being cognizant of the use of it, but in a startup that's coming into the ed tech space, what would you advise them to look for in being successful here?
There are a few things to be cognizant of. Again, those challenges tend to pool around those 5 different verticals. But let's talk about K-12 and higher ed for a second, because I think that's what most people associate with the space. Especially in K-12, one of the biggest problems tends to be the sales cycle. So decisions take months, if not years, to go through. And since the sales cycle is so long, that translates to an exit being on average closer to 7 years rather than the average of 3 to 5 we see in the consumer space. So being patient is probably a requirement for investors in the space. There are ways to shorten that sales cycle where we help a lot of companies with doing so, but being cognizant of that patient requirement is important. The plus side of that sales cycle is that once you actually achieve a relationship with a school or a district, then that tends to be a high rate of renewal among those schools. It's rare that a school district will change users quickly unless there's a very compelling reason to do so. So things tend to be very sticky. But given the time and resources it takes to actually make a sale, that valley is usually what startups tend to die in.
Very good. Where do you see the immediate opportunities to pursue in the ed tech space? We've talked about a number of areas like coding colleges and others. But if you had to pick one or two applications, what would you think are the low-hanging fruit?
I would specifically look at the earlier stage of opportunities and look at it with a critical eye, given that it's much cheaper and more easy to build a company in 2019 than it was 10 years ago. That's especially true of the edtech space. A lot of companies have come up with, I'd say, tools, not companies. So looking at a solution and seeing it as a very point solution isn't a very investable opportunity. But if you look at a company and see its growth potential to solve a big problem for a particular customer in the space, that's probably a good filter to place. And the companies that pass that bar are decent opportunities. I think the second filter to place on the space is probably the requirement to have a domain expert on the team or on the advisory team that actually is a learner or is an educator, changes from being a early childhood educator or a teacher in a classroom to a PhD or a chief learning officer on the corporate learning side. That domain expertise is pretty important if you're actually having a learning solution. And then thirdly, the understanding that domain expertise is not important if you're tackling a more administrative side of the space. The administrators tend to be the decision makers around making purchasing decisions. So if you're solving a problem for them, that tends to be an easier way to shorten that sales cycle.
Well, that sounds like good advice. In the last few minutes that we have here, what else should we cover that we haven't?
I think the best way to get to know the space is actually jump into it. I'd say selfishly, one of the best ways to get to know the space is through us. So attending the festival that we host for 1,300 to 1,500 investors, educators, and entrepreneurs each year helps. It's built to be a welcoming gateway for anyone in those categories that is looking to explore the space. And if you're an entrepreneur that is interested in the industry, we help with positioning your company as such. Companies, as we know, can be various versions of themselves, especially at the early stage. And for even peripheral solutions that may see a few users among schools or learners, it would be a quick tweak to test that market. And it's a compelling one. It's, again, as I mentioned, if you care about the non-financial outcomes of supporting the space.
Well, that's great. So how best for listeners to get back in touch with you?
Well, very simple. We have a couple of websites to check out. So StartEd.com is probably our primary one. And then if you wanted to visit our festival, it's nyedtechweek.com. But if people want to reach out to us directly, it's simply staff@startedaccelerator.com. People wanted to reach out. But I'm pretty friendly if people reach out on LinkedIn as well.
Well, that's great. We'll put those in the show notes. Appreciate you sharing that with us today and hope to have you back for a follow-up soon.
Excellent. Thank you, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.